While Malaysia may have maintained its A- rating from Fitch Ratings with a stable outlook, the credit agency warned that political risks remain prominent in the country. Fitch points out that aside from Malaysia, this remains an issue in several Asian countries and is often related to relatively weak governance standards. In Malaysia's case, it is the murky ongoing fate of State Fund 1MDB that has some wringing their hands. Fitch notes that so far there's been no discernible negative impact on policy making, but it will continue to monitor developments for any long-lasting impact that it could have on political stability, policy making or investor confidence. However, the stable outlook reflects the agency's view that near-term refinancing pressures will be alleviated through a mix of multilateral and bilateral support. Fitch also opined that geopolitical risks for the region may become even more prominent if a more isolationist US foreign policy stance emboldens China in areas of tension, such as the South China Sea. According to Moody's Investor Service, Malayan banking Berhad or Maybank is facing rising problem assets in two of its key markets, namely Singapore and Hong Kong, which has pushed the group's problem loan ratio from 1.9% last year to 2.2%. However, Moody points out that Malaysia's largest bank's strong capital buffers would help to mitigate the related risks, explaining that the rising problem assets in Singapore and Hong Kong reflect primarily idiosyncratic risks and that in the longer term, Maybank's credit profile will benefit from its presence in these otherwise low-risk and less volatile markets. According to Moody's, most of Maybank's problem loans in Singapore are related mostly to oil and gas, while in Hong Kong it comes from a small number of large problem loans. Singapore remains Maybank's most important foreign market, accounting for 25% of its gross loans, while Hong Kong accounted for less than 2% of its loan book, but the jump in delinquencies has pushed the problem loans ratio ahead of other markets. It was a story of poorer selling chicken as Berjaya Food Berhad saw its second quarter FY 2017 earnings drop by 18.8% due to losses at its Kenny Rogers Roasters operation as Malaysian consumer sentiment got weaker. Net profit for the quarter came in at 5 million ringgit compared to 6.2 million the year before. However, on the bright side, revenue went up by 10.1% to 149.1 million due to higher sales at existing cafes and additional cafes operating during the quarter. B-Food also recommended a second interim single-tier dividend of 1 cent. The group admits that with the weaker ringgit impacting gross profit margins and other economic factors, B-Food says that it would be operating in a very challenging environment for the rest of FY17. But B-Food adds that it still expects Starbucks to maintain its revenue growth momentum, especially with its new fast-moving consumer goods business that will contribute positively to its operating results. National oil company Petroleum Nasional Berhad's unit Petronas Cari Gali was among the winners of Mexico's deepwater oil and gas auction according to Reuters. Mexico has so far auctioned 8 out of the 10 blocks up for grabs in the Gulf of Mexico, with China's offshore oil corp taking 2 of the 8 blocks, while Australia's BHP Billiton is partnering with Mexican state oil firm Pemex for the Trion oil field in the Gulf of Mexico. While Petronas Cari Gali and private equity-backed Sierra Offshore Exploration featured in 2 winning consortia, one fronted by US independent Murphy and Britain's Ophir. According to Energy Minister Pedro Joaquin Colwell, this exercise underlines Mexico as being very competitive in the oil and gas sector. According to Reuters, before the current administration ends in 2 years, Mexico could likely call 3 more oil auctions. Despite going up against the likes of Maxis, Digi and Celcom, U-Mobile Sdn Bhd remains positive on enjoying growth, while in the same breath acknowledging that the market is saturated and that competition will intensify in 2017. U-Mobile CEO Wong Hyang Tak said that while it is too early to ascertain the impact of new entrants like Weebee, one can only imagine that next year will definitely get more interesting. For 2017, U-Mobile's priority will be on rolling out its additional spectrum allocation from the government, which would allow it to enhance its customer experience, and also plans to ramp up on strategic partnerships. Wong adds that while it is hard to say if consumer sentiment will improve amid the uncertain environment, the telco will work to keep its products and services relevant.